Everyone, and welcome to this presentation. In today's presentation, I will talk about how to swing trade into profits, trading only 10 minutes a day, stocks and ETFs. I'm going to start off with the risk disclaimer, and basically what I'm about to share with you, the information is for educational purpose only. It should not be construed for investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. And I'm pretty sure you guys know by now that trading involves a high level of risk and may not be suitable for all investors. You could lose money. So before deciding to trade, you should carefully consider your objectives, your level of experience, and risk appetite. All right, let's continue, guys. First off, if you want to get a hold of us, you can reach out to our website and social media platforms. Our website is TradeOutLoud.com, and our social media platforms, Twitter, Facebook, YouTube, and LinkedIn. Also, our email, if you have any additional questions besides this presentation. And if your question was not answered today, please feel free to email us at info@tradeoutloud.com. I will personally address your question and we'll answer your question. Just wanted to highlight the fact that on Twitter, twitter.com/tradeoutloud is the place where I post some trading ideas for the day and also for the week. So feel free to follow us on our private Twitter on our Twitter feed. It's not private, and on our Twitter feed, and also on Facebook for a lot of trading ideas. Okay, so for those of you that do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. For those of you that have heard me before, I'm pretty much focused on day trading futures, and I day trade futures in the first 2 hours in the morning. And this is the first time in a very long time when I am doing a swing trading webinar. So I do swing trade stocks and ETFs a lot. And in fact, it is my preferred style of trading. And I will share with you why it is my preferred style of trading. I have been doing this actively for my own money and managing my own money for the last 17 years. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I also run a swing trading service for stocks and ETFs since 2010. And we do have a performance portfolio since 2010 for the last 10 years. I also run a trading room for futures, and that is the newest program that we have here with Trade Out Loud since 2017. I do offer trading education for swing trading and for day trading stocks and futures, and also you could trade other assets based on the same strategies. I specialize in high velocity moves. I will share with you some of the trades that I have taken throughout this month. And I will also share with you a trade idea that is at the end of the presentation that is perking up and it's ready to trigger. And that is as soon as tomorrow. And even in the overnight trading, pre-market trading, that is. I'm the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, and chart synchronicity and divergency. And what I mean by that, I trade in sync with the market. So I follow the institutional footprints of the bigger sharks that are in the market. In today's presentation, I will talk to you guys about what swing trading is and what swing trading represents for me, and also a little bit about active investing. I'm also going to ask you some questions because swing trading may not be right for everyone. Okay, so I'm going to be sharing my thoughts on swing trading and who should be swing trading. I'm going to share with you why I love swing trading. It's in fact, it's no secret that swing trading offers you the liberty to unchain yourself from the computer. So because I'm sitting in front of the computer for about 3 to 4 hours every single day prepping for the trading session, and also prepping for the trading room that I run for futures. That is where we day trade. And that is a very, very, very consuming, let's say, I would not call it a job, but activity, let's say. And I don't want to focus more on this particular activity more than 2 hours a day. And I specialize on these high velocity moves only in the first 2 hours, and then I'm done. And I run the swing trading, and I run all my swing trades basically on autopilot. I'm going to share exactly how I trade, how I swing trade. I love swing trading, and I definitely see myself only swing trading 5 years from now. So from 5 years from now, I've decided, you know what? I think that 2025 is going to be the year where I'm going to retire from day trading. I'm just going to take on swing trading because it's a really profitable way of making money. And it's definitely a time where you don't have to be chained in front of your computer. So you can trade on the go. And I'm going to teach you today how to spot opportunities in any kind of market condition. So if I tell you right now that swing trading is the easiest trading style to make money, would you believe me? You better believe me, because it is the easiest style to make money, and it's more accurate than day trading. In day trading, you have to be an expert. You almost, and especially what I'm doing, because I'm day trading futures, you really have to know exactly what you're doing to capture these high velocity moves in futures that are really hefty. So let's start with swing trading and investing 101. So swing trading is actually the sweet spot between day trading and position trading, that is investing. It generates high probability trades, and it offers you the best chances of success and actually the best return on investment. Swing trading positions can be held from 2 days to a couple of weeks, and it all depends on the market activity. Usually as you're going into election, the market tends to stabilize and tends to range a bit more than outside of that space, outside of that environment. The market does not like the unknown, so it's most likely to be ranging going into election, and especially a month or a month and a half going into election. And then you're going to see on election night, the volatility pick up dramatically. It always does. And there are huge trading opportunities based on technical levels in that election night. But other than that, you can still swing trade in a ranging market. And I think that your focus needs to be more, and Jim talked about it before in his presentation. He tapped into a little bit into high dividend stocks, and he talked about the Pfizers, he talked about the XOMs. These are the type of stocks that you need to hold into this election period come November. So October, November, and October is known as being a very volatile month, beginning of the volatility in the last quarter of the year, and it's always a little bit more volatile, but there are huge trading opportunities that arise into that period of time. Swing trading focuses on higher time frames, and therefore your accuracy in trading is going to be higher because it's based on larger areas of support resistance that are much more likely to hold than a 2-minute or 5-minute or a 15-minute. The focus time frames are the 1 hour, the 4 hour, the daily, and the weekly charts, and these are going to be your zip code if you decide to become a swing trader. Now, position trading, that is long-term trades. Now, positions will be held from a few months even to a few years. It depends on the trend. It depends on the trend development. It depends on how it achieves targets, etc. And also these position trades are great accumulations, like I said, for dividends. So you not only that you're going to make money in those particular trades, but you're going to be paid dividends. So it's very advantageous to have some long-term trades in your long-term account. This particular type of trading focuses on much wider time frames, and of course you're going to focus on smaller time frames, perhaps to initiate a trade off of the one hour, 4 hour, daily, etc. But your time span is going to be much wider, so your focus is going to be more onto the weekly, monthly, quarterly charts, and even annual charts. Swing trading and investing captures a portion of the swing from a swing high to a swing low but it never nails the very high and the very low. So it's a portion within that swing. And everything is based on technical analysis. Just want to show you a chart here, and this is ZM that we have traded ZM. And I just want to show you here what this stock has been doing. This is a daily chart. This is exactly perfect for a swing trading activity and for swing trading activity. And once, obviously January, December and January, you could see that, the stock was very much, range bound, was not doing anything. And as we were heading, this is the first move, and you could see that the appetite came in for Zoom as the COVID hit China and started to spread around the world. So this was the initial pop. This was the rocket bar that launched everything, and you can see that it corresponds with that exact timing. So it's after January 27, and since then it had been hovering. So from this moment when it ignited higher, it created this range bound type of action. And by the way, for those of you that do not know what kind of moving averages these are, I trade with very simple I trade with actually very little indicators on my charts, but I do trade with a 10 exponential moving average, which is this pink line here. I trade with a 20 simple moving average, which is the blue, and I trade with the 50, which is the green, and the red, which is pretty much flat right here, is 200 simple moving average. So you can see that this launch in price and then consolidation, digestion of the area made for the 10 EMA to close up into the bottom of the range. That created a shelf of support that further propelled the price higher. And since this moment on, and this was actually in the first week, I think in the first week and a half in February, when it consolidated, this was the launch for something that can potentially become extremely bullish as we're moving forward. Remember that a lot of individuals were quarantining throughout the world. It started with Asia, and then when Europe got hit, a lot of individuals had to start working from home, and Zoom became very popular. Obviously, Zoom is not the only online platform for communication out there. However, because of the ease of access and really it was very affordable, a lot of individuals were driven to the Zoom platform. And you can see that the 10 exponential moving average has helped the price and has propped the price a little bit higher here. So we see the railroad tracking right here. We see the fanning out of the moving averages. And every time we see the fanning out of the moving average, it means that the trend is trying to power up or even power down if the price is trading under the moving averages. So this was actually the first mini tap into the 20 SMA right here. So remember, the price cannot stay extended for a very long period of time without revisiting these moving averages that are literally magnets for price. And definitely this was the first volatility that came here shortly into the 224. And then we had an inside bar, rocket higher again when the price was trading right above into this area. Take a look at this mega extension right here. It's almost like a $20 move, and it was extremely violent to the upside. And then, of course, what happened was the price was drawn back to the 20 SMA. The price was trying to regain its momentum and was trying to choose the moving average and the momentum that it needed for the next continuation higher. Remember, any pullback into the 10 EMA does not guarantee a further leg higher in a very big continuation to the upside. Remember that in swing trading, stocks and ETFs are more likely to pull back into the 50 simple moving average before they have a really meaningful type of swing to the upside. It's a much more reliable platform, a shelf of support from which they can rotate and start pushing higher. So the time came when we have the consolidation and actually the pullback here. We see a pretty flat support and the 20 SMA just crossing through price, and then we have the rotation for the mega leg higher. Okay, So we had a first swing, we had a second swing, and we had the third swing. So the first swing came from the 20 SMA. The second swing came back, and you could see right here. You can see right here that the price came back into the 50 SMA, extended, and came back to the 50 SMA, and now got extended again. Now, what I want to mention is that swing trading is about capturing a portion of your trade, a portion of the swing. So that means that you're obviously going to look for a confirmation to get in, and that is going to be decided on a buy pocket or a pullback buy situation. You're going to exit the trade as soon as you are seeing a reversal or a target achieved. So in this particular case, you can see that the prices got very extended, rotated back, and the momentum from the initial move, just evaporated. Swing trading is actually the sweet spot between day trading and position trading investing. It generates high probability trades, and it offers the best chances for return on investment. Swing trading is not about capturing the entire trend, like I said before. It is about finding the best possible entry opportunities and profiting from the stocks or the ETFs momentum move to the upside or to the downside, but simply by not living through reversals. Swing trading is a simple strategy where you can enter a trade where the price breaks above a pullback reversal pattern or breaks above a range. So I often like to see prices that are pulling back 1, 2, 3 candles, maybe 4 or 5 max into a key location. The more the confluence area into that zone, the better it is. I love to look for confluence areas and never get into a trade, not even a day trade, without having a confluence area. So I need to see at least 2 or more elements that are lining up with my support, that are creating that perfect shelf for a rotation that can take the price higher if I'm looking for a long in stocks. The key is to know how to enter upswings and downswings and identifying that sweet spot and banking on the profits before the market turns around. This is key in swing trading. And the elements of the trading, the elements of the trades are definitely the entry. So this should be your focus, your number one focus. Your stop, because if you have your entry and your stop, then you can determine your position size, right? Your share size, and of course your targets. These are elements that you need to know way ahead before getting and initiating a trade. And swing trading is all about following institutional footprints. Institutional buying creates these massive follow-throughs, either to the upside or to the downside. And if you're an astute trader, you know how to recognize these patterns from which they can blast higher, or you could swing both ways. If you have a retail trading account, you could swing both ways, long and short. If you have an RA account, then you could look for longs, and you could look for inverse trades as well. So institutional buying occurs when during some super strong uptrends, obviously, and downtrends, and you're going to be looking for these technical pullbacks into these key locations, whether it is the 50 SMA or the 20 SMA or even in the 10 EMA in some cases. That, along with the confluence area that is deriving from multi-time frame analysis, will provide buy zones that are very clear buyable points, and these are going to be the accumulation areas. Now remember that institutional traders are not going to buy all the size in one shot, right? Because what would that do to the market? So they start layering in, but their layering in is very consistent, and you're going to see the footprints. You can see the footprints from the volume. We're going to talk about this a little bit later. By volume, by price action, by continuity, by opportunity, by ranges. And ranges are a great opportunity for institutional traders to leg into trades as well. All right, let me share with you a trade that we've done in Home Depot. And this is a trade that we have recently closed. Our entry was 222. this is exactly what we're looking at. So you can see right here the fanning out. So once it crossed over this, you see the crossover here, the 10 exponential with the 10 exponential with the 20 simple moving average. All right, so you can see that the price is trying to hover and hover and hover and hover above this 10 EMA. Now, is this a perfect entry for us? No, it's not. Okay. Now remember, the market just came from a collapse. It rotated. And it's starting to form its new higher low. But at this point, we don't know if this is going to be a higher low or not until we got this gap up. And once we had the gap up, we could see that the price is holding the 10 exponential moving average, and then it's trying to hover higher, and it's respecting the trend. It's respecting actually a very aggressive trend on the 10 EMA. And remember what I said earlier, stocks are prone to, when they start their institutional buying and their institutional accumulation, they love to start following some kind of moving average. And in this particular case, it is the 10 exponential moving average, which is a very dynamic type of trend following. So you can see as well here, you have the dynamic fanning out of the moving averages. You have the railroad tracks. That means that you're going to have a lot of traction in price. Now, I don't trade unless the price is trading above the 50 SMA and above the 200 SMA. This is my personal preference. I'm extremely picky. I don't take a lot of stocks, but the stocks that I take, and I'm going to share with you how many stocks I trade per month, are extremely accurate and I have a lot of patience in watching them. And in fact, you know, Home Depot was, I almost watched it for a whole entire month before I got into the trade. So it's a wash on a day-by-day cases, watch the trading behavior, the psychology that goes behind the candlestick is very important. And once the price reached this 200 simple moving average, now remember 200 SMA is the daddy of all moving averages. It is the king of all moving averages. And this can either above it's bullish, below it's bearish. So at this point, we had a really tremendous rally from the lows of 140 into the 220s. And some would say, hey, you know what? You could have taken this trade a million times. Yeah, but it wouldn't have the accuracy that we have and a good risk to reward ratio, because you can see here that even if you wanted to take the trade here over this little 3-bar cluster, the stock gapped up. So if you woke up the next day and if you popped up your computer, you would have seen that the stock has gapped up above your entry. And getting a late chaser, so I never chase trades. I even do not like the term to chase the trades. I don't use it ever. I never chase the trades, because chasing a trade means that you're enlarging your, increasing your risk size. And I never want to do that. So I waited until the price has some kind of confirmation, and guess what? Remember what I just said earlier, this the price cannot stay extended for a long period of time from its moving averages, and it pulled back, and this was my signal to get in. So I got it at 222, my stop was 214. I had a target of 238, and it ran into my target, and quickly, as I saw the next day, it ran a little bit higher, it rotated, it reversed, boom, I was out. And that is because we had huge institutional selling right here. So this trade moved $16 for us. And again, in volatile market conditions, and we are trading right now in high volatility, okay, you can expect follow through to happen. You can expect to, if you have a stop, you can expect for the stop to be taken out immediately, right? Because this is what volatile markets do. If they run, they run. If they don't, boom, you're out. And that's why stops are a great way to have a complete trade. Okay, so this is a trade that we've done. Institutional exiting the trade. You could see them right here on the volume. Now, let's talk a little bit about entries, right? What is an entry? An entry is an early point within a potential leading stocks consolidation or reversal from the correction of the pattern, right? So the pattern, the correction is the pullback, right? So you're waiting for the pullback. I typically don't like to scale in and I don't like to scale out. The only way I can scale in a trade is when I'm having a double a double trigger. Let's say I'm getting an early trigger on the daily chart and I'm getting a later trigger on the weekly chart. So I'm getting on, let's say on a daily rotation, I'm getting in, I don't know, my first entry, and I'm using a second entry as the stock is going with me, with the price in the direction. Okay, so I'm not averaging against. Of course, I teach damage control so you don't freak out when the stock goes against you. And so you can work the trade out, because swing trading is all about, and trading in general is about knowing how to work the trade out. Sometimes in trading is not always, black and white. Trading sometimes trades into a gray area, and especially when it's sideways, when it's into this pandemic environment, you want to make sure that you are even the stock is respecting, all the trend, and maybe it's pulling back to the 20 SMA. So pay very close attention to the surrounding of the stock and know how to work it out. I mean, this is what we do every single day in the trading room, in futures when we day trade. And of course, this is what we do into our swing trading. And this is what I teach live every quarter. We host a class, and I teach my traders not to be afraid of the market and not to get out when they see a little bit of red in the market, especially if that was a volatile move down, because sometimes they're running stops, and you may stop out just for a few pennies, and then you could see the trend resume. I mean, how many times has that happened to us, right? A lot of times. Okay, so this offers both a way to get on board strong leaders later in their uptrends, as well as extremely reliable and powerful tool for adding to positions initiated earlier when a stock was still within or just emerging from its original consolidation or reversal from its correctional pattern. Okay, this is another example right here. Okay, so this example in Roku had a really great potential for a move higher, in which we speculated. So here we were watching and watching. I was watching to see if Roku is going to hold the 10 EMA, and it was not. Okay, so I didn't have any rotation confirmation from any of the time frames, especially on the daily. I love to trade with the daily. So I have separate kind of swing trades that I'm looking at. So there, some of the swing trades are very short term, that are based on the 1 hour and 4 hour charts. I have trades that are based, most of my trades are based on a daily chart, and I have trades that are based on the weekly chart, and these are all in the swing category. Okay, so I waited for the price to pull back, because I know that the price is likely to pull back into 3 areas. Area number 1 is going to be the 10 EMA. I never received a rotation above this high, and then it hovered, and then I had the pullback into the 20 SMA, and bingo, I had my confirmation of rotation. You see this green candle trading above the prior high, boom, rotation that took the price higher. And in fact, this was an $8 move for us, which is fantastic, right? And you can see the trade right here. When we called it, it was May 4th, Roku long. This is the entry, this is the stop. This is target 1, 2, 3. This is our exit price into the 127. This is our last lot, but we took profits into 127, 128, 129, and 130. And I like to keep one last lot for the remainder of the trade. And that's what I do, is I trail it. So I never take myself out of a trade. Okay, so when you're swing trading, it is very important that when your stock and when your ETF is reaching certain targets, peel some off. And my rule of thumb is, when I get into target 1, I take half of my shares off. When I'm reaching target 2, I'm taking a quarter or less than a quarter. When I'm reaching target 3, I trim some more, and then as I'm going into the final targets, and if I have only 2 lots left, what I do is I sell the last lot into a last target. And even if it is at my last target, I don't take it off sometimes. It depends on the resistance zone that it is trading in, but I leave the last lot in for further trailing, and I trail it on the daily. Okay, so this is how I do it. So initiating a position, so that is the entry. That is an early point excuse me. I just scrolled up a little, scrolled higher. Sorry about that. Okay, so who is swing trading for? So who is swing trading for? First of all, traders with busy lifestyle who want to manage their own long-term money or their own trading accounts. Part-time traders that do not want to sit in front of the computer all day long. And this is me right here. Okay, so I've been trading for more than 20 years. And I come to a time when I really don't want to micromanage everything anymore. So to me, it suffices if I trade 2 hours a day, day trade, and that is my income producing style of trading. And I swing trade, which is my wealth generation style of trading. Wealth generation because you have money invested. You cannot pull money out of the market every single day because you are still invested into positions. Day trading is an income producing style because you're in and out the same day and you have access to your cash every single day. For instance, in swing trading, if I initiate a position now, I know that that position is going to probably take from 2 days anywhere to 2 weeks or more or even less until targets are achieved, and my money is stuck into that position. You need an average of about 10 minutes a day to manage. And again, I do most of my work through the weekend. I scan in the weekend. So again, this is 10 minutes a day, Monday through Friday. And this is how much you need to spend in front of the computer. Sometimes you don't even need to spend the 10 minutes a day, because the way I trade is when I look at the market, and because I scan through the weekend, I scan Saturdays and Sundays when the market is closed, and I get all my setups through the weekend. I have some additional trades that I watch throughout the week, and if something should develop, I'm going to add to my watch list. But that is when I get all my trading ideas at the end of the week. That is when I'm looking, that is when I'm scanning. So after I scan, what I do is I set alerts. I set alerts for my entries, for my stops, and for my targets, and my work is done. So if you want to scan, it doesn't take more than a couple of hours a day. I teach in my live class how to scan and how to scan for high probability trades. And it doesn't take more than 2 hours. Sometimes it takes less than 2 hours, but it depends on the market environment, because if you're getting a very active market, then you want to scan a little bit more because you want to go through a lot of stocks. And I also use a scanner, but I find that, going through manual scanning is so much better because you're identifying better setups, better opportunities that way. The other thing is that you get to work from home. Don't forget that we're trading into this COVID-19. We're very lucky to have trading accounts and to be able to generate money from home. There are so many individuals that have lost their jobs, are quarantined right now, and you don't know if when the economy is going to start, if they still have that job. So the uncertainty is going to be really, really big, and we're very fortunate as traders to make money in the market. And you make the last but not least, you make your money work for you. Now, here's an interesting fact. Evidence indicates that day trading too actively can be a major drag on performance over time. And why is that? Well, because sometimes a lot of traders make money in the morning and they donate it in the afternoon. So over trading and over day trading is not healthy. And that's one of the reasons why I only trade in the first 2 hours in the morning and I day trade futures. So according to different studies, short-term traders generally achieve lower returns than swing trade and active investors. The second reason is that I mentioned it earlier, setups are more reliable on a swing level because they're based on higher time frames, and higher time frames are more likely to react and to work than smaller time frames. For instance, support and resistance levels and moving averages, pullbacks into moving averages on a 1 hour, 4 hour daily chart or a weekly chart are much more meaningful than pullbacks onto a 5-minute chart or pullbacks onto a 2-minute chart. So day traders have the instance of stopping out of trades way more often than swing traders. So, this research was done at the Graduate School of Management at the University of California. So let's talk a little bit about mistakes in trading. So the traders that only are looking for stock picks will only be part of the 90% that fail and lose money in the market. Why? Because they place their confidence into a trader that perhaps they do not know. They do not know their trading style. They do not know their trading plan, and they do not know how long that individual has been trading for. And in some cases, and the majority of cases, they have no record of their performance, okay? So again, stock picks work only if you are an astute trader, an educated trader. You must dive much deeper to succeed. You have to understand why the stock is pulling back. Why is it reacting, or why is it not reacting, in order to have confidence to act. The biggest component is understanding the trades, and this generates confidence, and this generates winning trades. Basically, it's easy. You have to learn how it's done, and basically you only have to learn it once, and this is the biggest advantage. You only learn how to do it once. It is a skill that is definitely going to last a lifetime. You don't have to rely 100% on a service, because guess what? You know how to trade. You could do your own scanning. I mean, it's fine if you want to use a service, if you want to have those training wheels, so you can, learn how it's done and learn exactly, how other traders are looking at the market. But it's better for you to know how to trade, okay? We talked about the fact that it's a recession-proof skill. Now, did you guys know that the New York Stock Exchange floor was closed? It just reopened. I think it just reopened this Monday, or I forget. It just reopened. So futures floor closed, New York Stock Exchange floor closed. However, trading was done 100% electronically. Trading is a recession-proof skill. You can make money to the upside. You can make money to the downside. Oftentimes what I do when I have a few more positions to the long side, and when I see that the market is getting extended, I immediately go to the VIX to offset some of the losses that perhaps from the pullbacks the stocks may be incurring to offset them with the VIX. So I have a balanced portfolio. The best thing is that you can trade from home and can make money while other individuals are waiting for stimulus checks or even unemployment checks. It's too good to be true, right? Okay, now here are the 10 ways to generate income swing trading in 2020. First of all, you have to let the chart talk to you. Let the chart do the talking and guide you through the trade, and be patient. All you have to do is pay. And I know a lot of traders, they suffer from click-itis, okay? But the reality is that you need to wait for a pattern formation. And in day trading, you have to wait, and especially if you're day trading futures, and I specialize in only trading not only trading the futures indices, because we have a trade in futures gold, and in bonds, but you have to wait for a setup. And in day trading futures, I typically wait maybe 30 minutes, 45 minutes before I get a setup that is forming. Well, in swing trading, you have to wait even longer. You have to wait 3 days, 5 days, 6 days, even 1 week, or even more, or even 2 weeks before a pattern starts forming. So wait for the pattern to form and don't anticipate. Like I said, scaling in and scaling out of trades has its purpose. It's either done for damage control or to add to a winning trade. Scaling is another way, and if you're not using it for these two purposes, then scaling in is another way of saying, hey, I have no idea what I'm doing, but I'm getting a little bit here, and then I'll see down the road. You don't want to be that trader that trades into that gray area. And you have to pay attention to technicals. This market is such a technical market. It is an 100% technical market, 100% technical market. It has a precision, and I'm going to show you the precision and SPX as we're heading towards the end of the presentation. These levels are incredible. Okay, so it's a highly technical market. And we teach in our class technical analysis from A to Z, everything, so you can form and you can start not day trading, but swing trading and active investing and trade your own money. Patience to wait for the pattern, like I said earlier, and the risk level, right? What is the trade? What is the trade without knowing where your risk is? What are you going to do? Just wing it, saying, hey, you know what? It's falling. I'm just going to add a little bit more. And then it's dropping again. I'm going to add a little bit more. Think about what if you were caught in a trade just wanting to add a little bit more as the market had the black swan event in March and we had that sharp decline. That could have blown up our account, right? If we would have traded with that strategy. Select the proper time frame for each style, short-term swings versus medium-term swing or investing. I don't think the time is right now for long-term investing. I only have one stock that is for investing in my whole portfolio this year, my only initiation. But other than that, select your style. You could definitely take really great swings if you're more of an active swing trader, more swings off the 1 hour off of, and by the way, today AMD was fantastic for short-term swing. Also, medium-term swing, higher time frames. Don't overthink it. And I love to keep the, I love to say this, that trading is not about thinking. If you start overthinking, if you start squinting at the chart, and if that setup is not obvious, is not popping up immediately, say, hey, that's it. That's my entry. That's my stop. That's my target. Boom. I'm on it. If it's not obvious, do not take the trade. It means that you're hyper analyzing that trade and you're looking for a reason to get into that trade. Don't be that trader. Don't overthink and don't think. All you have to do is look at the pattern. If the pattern is speaking to you, if the pullback is obvious, just treat it as an algo. Okay. Become a good technical analyst, and that is a good chartist. You need to learn how to read the charts, trends, support resistance. And by the way, 8 layers of support resistance. Know how to do projections in case you have, and in today's market with a lot of stocks that are heading right now again into highs or new all-time highs. What is the next measure and move to the upside? You need to know, because that is where institutions are going to start selling, and you don't want to be caught on the wrong foot. Keep it simple. Look for relative strength. Look for relative weakness. Why? Because it's easier to trade if you're in a strong market environment. It's easier to trade a relative strength stock because it's going to run faster to your targets. It's not going to be like watching paint dry. You're not going to look for a weak stock in a very strong market. It's going to be like paint dry, and it's often going to stop you out. And the same way with relative weakness. In a relative weakness market, you're going to look for relative weak stocks so you can have further push to the downside, acceleration faster. And of course, go with the trend. I'm a trend follower 100%. Sometimes I like to do counter trend trades, and especially when we had the sharp decline, we traded futures and we swung futures. Futures are great to swing because you are hands-on 24/7, and you could take profits at 3 o'clock in the morning if you want. You could initiate a trade at 4 o'clock in the morning, so you have a really good grip on them. And of course, do not be stubborn. Don't insist into any kind of errors. If you have something that is not working for you, don't make that mistake. Don't make that mistake over and over again. Here's my game plan. I'm going to share with you my game plan. So how I work out my swing trades. First off, I zoom out to the higher time frames and I look at the technical image. Let's say I want to trade Apple. I look at Apple and I look at far out time frame, like on the monthly chart, weekly chart, daily chart, and I'm trying to see what the trend is. I'm trying to see where the price is in relation to all the indicators that I have in my charts and based on prior price support resistance and my 7 layers of price support resistance. Then I focus on my trend trading. So I evaluate, guess what? The market, right? I never trade without the market. So before I actually look for a trade, let's say in Apple, because I've used this example, I always perform an analysis on the market, NASDAQ, SPY, right? Russell. I need to have my under the hood, my market internals before I initiate a trade. And in fact, before I decide Apple, I look at the sector. So I look, my first thing, my first rule is to look at the market internals. I look at the sector that is outperforming within the index, and then I choose the highest performing stocks within that index. And that's how I have such a high win ratio in my trades. And by the way, the portfolio, I'm going to show it to you in a little while, or you could go to my website and you can find it right there. It's under the swing trading program. Okay. I do not hold swing trades into earnings. So a good example was Walmart. I had Walmart last week, and last week I've gotten shaken out of Walmart. I took my stop. Okay, I knew that Walmart was going to go and was probably going to tap into 130. That was our last target into Walmart, but I already had a stop in. So I'm not playing around with earnings as we're heading into earnings. And Walmart reported earnings today, and you saw where Walmart went, right? So guess what? I cut it's a loss. So what? It's just one trade in a plethora of trades. Okay, and so a good rule is to always keep your stops in. And like I said, I don't keep my swings into earnings. Options are a different thing. I don't do options. Maybe I do options once in a blue moon for stocks like Amazon maybe and Google. But other than that, I don't use options unless, let's say, I hold it to earnings, and then you could do a lotto. So zoom in always on the technical time frame where your pattern is forming, because the thing with swing trading is that not always you're going to have a defined setup that is going to form either on a weekly chart or a monthly chart or on a daily chart or on a 4-hour chart. So look at all the time frames and then look to see where the setup is forming. And where the setup is forming, that is the time frame where you're going to establish your entry, your stop, your targets. And all your trailing obviously is going to be on the same time frame where you initiate the trade. Establish the trading parameters to be very clear and very obvious before you initiate the trade, so you don't have any kind of surprises. So where your entry is, where your stop is, and where your targets are supposed to be. And have a precise trailing plan in place before you get into the trade. And again, assess the odds of the trade before you enter the trade. So make sure that when I'm talking about this, assessing the odds, see if it's a 50%. If it's a 50-50 kind of trade, don't take it. I mean, you have 50% chance of stopping out of the trade. Take only trades that are 75% or more, and this is what this is my system that I'm teaching as well. So if you trade with 75% or more, you're always going to have more winning trades than you have losing trades. And these parameters are determined by the distance between your entry and the next the projection area, let's say the next resistance area. And always position size, share size to your risk level. I know that a lot of traders are trading into the 1%. I, for instance, trade into the 1%. I'm a very conservative trader, and I trade 1% per trade from my trading account. There are some other traders that use 2%, 3%. It all depends. And it also is based on your risk tolerance, because you could have a ginormous account. And if 1% is too much for you, obviously go 1% or even go less than that. Trade something that you're comfortable with, because if you're not comfortable in your trade with your position, you're going to have that hot potato feeling. You're going to feel the heat. And then you're going to mismanage your trade. You're going to either exit the trade too early, or you're going to, you know, at the first sign of a pullback, you're going to say, I am stop out. Truck, I am not using a percentage. The distance between my entry and my stop is determines my position size. So let's say if my entry is at $25 and I have my stop at $20. So $5 is my risk level. So I position size according to that risk level. And always scale into targets. We talked about this earlier. Always take some out at target 1. So if you have a pre-made plan, this is what also we teach in our class, right? What to do when the stock reaches target 1. What do you do with your stop, right? So when the trade reaches target 1, you bring your stop to break even. Guess what? You're going to have a risk-free trade. When the stock reaches target 2, you trim some out and then you raise the stop to the next support zone. And so much easier when you know ahead of time what you need to do. Rules. Okay, let's talk about rules. Environment, high risk environment or low risk environment. What kind of environment are you trading in? Seasonality, earnings. Always be diversified. Use limit orders. This is what I use. Place your limit orders, right? And it's so much easier than buying at market, right? I mean, I never use market orders, like never. Follow the overall market and industry group. Pick relative strength, relative weak stocks based on the market. Do not get out of a good trade. Let the market get you out. I cannot emphasize enough how much. Keith, that's a good question. My personal preference is to trade stocks that are trading between, and again, if the opportunities, for instance, I have a trade in here, HEAR, okay, which is below $50. But if they're my preferred stocks are from $50 to about $250. These are even $300, $250 to $300, because with the market so much up in the air, you know, prices have increased. So again, one of the other things is that let the market take you out. This is the most important thing in trading. Don't take yourself out of a good trade saying, okay, boom, you know what? There's a target at, I don't know, $270 or at $57.50. I'm taking myself out. If you're getting the momentum into that stock, and if the price is pushing beyond your target, well, I don't know, maybe 10 cents or 30 cents or even, you know, 15 cents from that point, why take yourself out of the trade? To place your stop, raise your stop. What is it so hard? Raise your stop into the area where you would have had the where you would have had the last target. Okay. And that makes a lot of sense. And this is how you stay in the trade longer, and also be in sync with all the time frames, because sometimes you're going to have a buy setup that is forming on the hourly chart, and at the same time you're going to have a sell setup that may form onto a daily chart. So that is going to be that's not going to be in balance. Okay, let's talk a little bit more about these trading rules. Trade stocks that have relative high volume or an increased volume compared to the prior 2 to 7 days. Trade stocks that have patterns of beating earnings. Look for fundamentally strong and solid stocks. Ideally, to trade stocks that are trading above the 20 and above the 50 SMA, like I showed you some examples, and I do have some more examples. On the time frame that you're trading, this is very important, right? The time frame that you're trading, either it is the 4-hour or the daily or the weekly. Look for confluence areas. What are confluence areas? Overlapping key locations from multiple time frames, as they will generate that high velocity to push into further targets. Stocks and ETFs must trade at least 1 million shares a day. I don't trade something that is thinner than that. I don't. I want large, massive participation. Look, also sharp pivots have an increased risk of failure than rounded bottoms and consolidation. So with that being said, rounded bottoms, consolidations are some of my favorite patterns. All right, here's an example with AMD, and this is my home screen, and this is how I have everything laid out. So I have everything in front of me. So you can see here that on the top, I have my very small time frames. These are executional time frames for day trades, which I'm not using, but I have this layout because I do day trades. I do day trade futures, so I need to have that. if you are not a day trader, you don't need these time frames right here. You don't need these time frames. Maybe the 15-minute for an aggressive counter trend. But other than that, you don't need the 1, the 2, and the 5. Your zip code is going to be the 1 hour daily chart right here, weekly chart and monthly chart, and your truck. I'm gonna answer all the questions, guys. Okay. When I start analyzing the stock, I start always with the higher time frames, and I go from higher time frame. I go top down, right? So I go monthly, weekly, daily, and I look for setups that are developing around these areas. Okay, here are the cues. Okay, and this is, simple. You can see right here, I have very simple indicators. I don't have anything that is flashy or glittery. I don't have lines. I don't have anything on my chart. This is the daily chart of the cues, and you can see that this is the type of pullback that you want to see. You want to see a pullback. Look at the retest here into the 20 SMA, expansion higher, pull back to the 20 simple moving average, and you have a pullback buy right here. You can see 1, 2, 3, boom, into the 20 SMA rotation. You see this candle rotating above the prior high. Bingo, you have a trigger, right? And this is actually very bullish, and it's getting into an extended target right here into the 229. All right, let's talk about GLD right here. This is another trade that we've done. And we call this trade, you can see the entry right here, GLD 162.01 was our entry, and we had targets all the way into the 166. And this is from our performance portfolio. Take a look at the initiation right here. We know how to read, and I can teach you how to read where institutional buying can come into play. And notice this area right here. This is a rocket bar off the 20 SMA. Look at the chop that was around here, right? And once it had a defined, it started to trend a little bit on the 10. Moving averages were back again into the 20 SMA. This was a sign for a rotation to the upside. And actually, this was a 4-hour trigger right here, which was beautiful. And it ran into target. You can see it right here into the 166. Now, NVIDIA, what was I telling you guys earlier was the fact that we need to trade with the market. We need to trade in sync with the market. So when you see the chart of the Q that I showed earlier that showed the relative strength, look, that shows strength, right? So you're trading an index that has relative strength. It's much stronger than the Dow, much stronger than Russell, much stronger than the S&P, right? You want to trade something that is within this index that is stronger than the Qs, right? So you can accelerate and you can have the price accelerate higher into targets. So here we have it. Look at the nice following off the 10 EMA right here. Definitely pulled back by skyrocketing 363.5 today. Okay, so I'm going to do a little comparison, successful traders, unsuccessful traders, right? Successful traders are always educated. Unsuccessful traders, they always are looking for a signal service and they're uneducated, and all they do is pump money into signal services instead of getting the proper education. Also, they're always prepared, right? I mentioned the fact that I always prepare in the weekend, always prepare in the weekend for the week ahead. Unsuccessful traders, they're winging it. They're coming, they're looking on Twitter, they see some trader trading something or posting something, or they look around, they find some kind of email and they find a stock pick or whatever, so they're winging it. Successful traders know how to mitigate risk. Unsuccessful traders, they ignore the risk. Successful traders learn from failure, and unsuccessful traders repeat the failures. Successful traders always adapt and believe in accountability, and unsuccessful traders, they're random. They're all over the place, right? So how you can turn 10 minutes into a 5, 6, 7-figure trading account size? Well, first of all, is education. You have to learn how to trade. I don't care where you learn how to trade from, but you need to learn how to trade. You need to learn technical analysis, and what I talk about is advanced technical analysis, because this market is a very highly technical market. It's almost running 100% technical. I said almost 100% technical, and of course there are the factors of economic releases, of fundamentals, etc. But those are that very small, tiny percentage, because technicals are literally overriding everything. Do you guys know what news is, or what impact of the news is within a very strong trend? It's a brief interruption. It's a shakeout, okay? So it should be into this order. First, get the education, then fund the account, have a trading plan, do your homework, execute, never chase, mind your risk, position size correctly, trail into targets, let your winners run, and cut your losers, and always be aware of your market conditions. I'm going to share with you the results that we have in the trading room. And David, I know it's 7 o'clock. I still think I have like 5 minutes. I know I'm the last presenter. Just give me a heads up if I could go like 5 minutes past my time.
Yeah, that's fine. You're the last one of the day, so yeah, take a few extra minutes.
David. Thanks so much, David. Okay, so this is January. Our January results. We had 11 trades in the program. Not a lot of trades. January, just 11 trades. So less than two trades a week. About 2 trades a week. So January we made 49%, over 49%. February 59%. March 58%. April 71%. And we take 15 trades. Look at March. Remember March, the Black Swan event? We only have 5 trades, guys, in the program. That generated 58%. And May, we're into the 30%. And so far, 12 trades. 12 trades. Very active May so far. It was a little bit choppy, but we're up over 30%. You can look at our portfolio with all the trades, the winning trades, the losing trades. You can see our entries, our stops, our targets. You could go back test. You could go look at the charts, etc. So if you want to go and check out our performance, like I said, it's under the swing. I think it's TradeOutLoud.com/swing something, swing trading alerts or something. Just look for the swing trading program, okay? Now, take a look at the SPX. I wanted to show you the precision and how accurate this market is, okay? All right, so we had the bottom in here at 21.91, and we had the price go into a 261.8 extension. This is a hefty resistance area. Plus, we have the confluence of the 200 SMA at the 3,000. But guess what? This is still a very much bullish range. So even if we get a pullback into the 2,800 or even into the 2,900 area, this trend is still very much bullish. Why? Because this is the perfect confirmation of an uptrend. We have the bottom in, and we have 2 higher highs, 2 higher lows. This is all we need for the trend to start going again. And again, the bigger picture is going to be to see a break above this zone right here. Okay, the cues, we talked about the cues. I'm going to give you guys a quick trade idea going into tomorrow. Like I said, if you have not been trading before, watch how watch how this trade is going to play out. This is GLD, and this is a trade idea for long. My suggested entry is $28.25. The risk should be, so the stop should be under $26.80. And these are my targets: $30.50, $32, $33, and $35. This is my trade idea for you guys today as a gift for being here with me to the very last of the presentation. So if you have the desire to make money, to make trading work for you, and if you want to change the pattern you're in right now, if you're not making money, trust me, you can make money in the market. And once you know how to trade, you will never want to do anything else again. And we can help you with that. We can teach you how to trade a system. We teach you the whole entire system from A to Z. We start with candlesticks, with time frames, with how to align time frames, with synchronicity and divergency. Like I said, charting A to Z, charting tools and indicators. We teach you the stages of the market. When it is the time to buy stocks or ETFs, when is it time to start trailing tighter? When is it time to start shorting? We teach you everything about trend and trend trading and trend following. We also teach technical analysis, and guess what? We teach you fundamental analysis as well. We teach you the anatomy of the trades and a detailed explanation about how to calculate and precisely calculate your entries, your stops, your targets, etc. We teach you trading patterns. We teach you money management, trailing methods, so you don't have any surprises when you're in a trade. So you are aware. We teach you intelligent stops and how to use intelligent stops. And these are the soft stops, how to deal with these soft stops. We teach you how to scale in and out of trades. We teach you pyramid trading. We teach you seasonal trading, damage control. So you're not afraid of the market when it goes against you. And even if you, let's say, we're in a trade right now, hypothetically, and tomorrow something happens overnight, something, I don't know, something bad happens overnight, and the market should gap down tomorrow, right? Let's say you didn't have a stop in. What do? The market opens, you freak out, you take yourself out of the trade. No, you do damage controls, and I could teach you how to do that. We also teach you scanning techniques, market internals, trading psychology, and the best of all, how to put the puzzle together, because trading is not about entries. It's not about trailing. It's not about money management. It's how you put everything together. It's a complex system. The other thing is that we're going to teach you how to identify these high odds patterns of 75% or more. So you're never going to have so many stops in your trading. We're going to teach you how to identify buying and selling pressure points. I'm going to teach you how to use multi-time frame alignment, how to maximize profits and minimize losses, how to pick winning trades in general that have maximum odds to run in your favor. Included with the class, the classes are always live. I teach the class. It is in a live trading environment where all your questions are going to be answered. We provide the recordings for the class. We provide you the manual, the platform layout. If you're using, let's say, the Thinkorswim platform like I'm using, I'm going to provide you with my layout. If you're using a different type of platform, which is fine, you can customize it to look like my platform, because let's face it, the platform and the way it's laid out has a lot to do with your trading, because you don't want to toggle along charts when you do that. Plus, you have a limited support when you trade with us. So again, this is part-time trading for full-time results. And literally, trading and investing is super awesome, and it's fun when you know what you're doing. The next 5-day class is June 15th through the 19th. It's from 2 o'clock to 4:30 p.m. Eastern. The class is priced at $69.97, and we're slashing the price to $4,997 just for this month, just for the month of May. The next class that we're teaching is going to be the next quarter, so we're going to be teaching it. We ran late a little bit this year, and we're going to teach it end of September. Also, you have free access to the TradeOutLoud trading service. This is basically a no-brainer, because you take the course, you learn how to trade, and then I generate the trades. So you're gonna earn while you learn. You have free access to the TradeOutLoud service until December 31st, 2020. That's another $1,400 slash to the price. All right. Now, I don't know if I have time to answer a lot of your questions here. Sam is asking, do you need a large account to trade your system? No, you don't need a large account. That's the whole beauty about swing trading, is because you're going to decide. Let's say you have a $10,000 account. I'm just saying out there. You have a $10,000 account, so you are, let's say, if you want to go with 1% of your risk, that is $100. So what that means is that you're going to position size your trade to fit that $100. You may take 2 shares or 5 shares or 20 shares or 1,500 shares. It depends on the price of the stock. So you can trade it with any account size. Is there any disadvantage of using trailing stops, and so you don't have to monitor as much? Truck, here's the thing with trailing stops. You don't want to use a preset trail. You can use preset trailing stops, obviously, and I put sometimes limit orders exactly where I want to exit a portion of my trade. But let me ask you this, Truck. Do you leave the house without your cell phone? I don't think so, right? So if you have your cell phone with you, you can have alerts on your cell phone. So when the price is reaching a certain area, you know that you're going to lift your stop. You're going to lift your stop there. Okay, Aaron, good question. I'm going to go back, and I think this is going to be the last question. Why is GLD. Here's the GLD. Gold. I'm sorry, this is not GLD. It's GOLD. Sorry about that. This is a typo here. Okay, so it's GOLD. You can see the ticker symbol right here. Gold, GOLD, is a base breakout. You can see here, this is a bull flag. It's a pullback into the 20 simple moving average. And right now, this is a bull sandwich. This is a strategy that we teach in our class. So this is a bull sandwich, and we take it over these highs right here, over these highs, and these highs. The trigger point is $28.25. This is actually in a nutshell, because the whole strategy takes about an hour to explain. But this is bullish context. Gold has been, and I'm in long in futures contracts in gold futures in gold. Basically, simply put, is the breakout, including a bull sandwich strategy with a pullback into the 20 SMA with a launch pad. Okay. Oh, Trock, thank you so much. Thanks so much. Easiest and best lecture today. Oh, thank you so much. Okay, guys, this is a wrap. Don't forget that David is recording everything. Okay, and the recordings are going to become available as soon as he's done processing. And I know he's like a super maniac. He's like processing as we're speaking right now. So he's going to have the recordings available to you guys right away. And if you have any questions, feel free to email me or any of the presenters here today. And I hope that